In today's video, I will talk about Canadian energy sector and explore top stocks listed on the stock exchange. If you are looking to add some energy exposure to your portfolio, you are in the right place. Before we begin, let me share why should you invest in energy stocks. As you know, oil companies are crucial to the global economy. There's a big demand of oil and gas throughout the world. Countries like China or Japan or India, where there is no oil reserves, they heavily rely on imports. Energy is needed for pretty much anything. To cook food, travel, running factories or industries, basically everything that requires energy. And it's not just oil and gas. There is renewable energy such as electricity and even hydrogen. Since most of my viewers are in Canada, let me tell you, Canada is a global leader on energy, currently standing at the top 4th largest producer of crude oil, which is about 6% of overall production worldwide. Also, Canada is top 5th producer of natural gas, about 4% overall production. Also, Canada is projected to keep expanding its energy production capacity, and numbers of LNG and hydrogen projects, pipeline projects are on the move. Canada's energy sector is evolving and it has a huge potential, so it might be a good idea to look into investing in some of the energy stocks before they explode and become expensive to buy. Alright, let's get into these energy stocks. Please note though, these are not the only energy companies out there. These are just the one I chose to talk about. So the first one is Enbridge. The ticker symbol is ENB for both TSX and NYSE. So why should you invest in Enbridge? Enbridge is a leading North American energy company. It currently operates the largest oil and liquid pipeline system in North America. It also has a significant natural gas transmission and storage business, as well as a growing renewable power generation portfolio. This is important because countries are now transitioning towards renewable and sustainable energy. Enbridge is often considered a stable long-term investment due to its massive assets, which generate foreseeable cash flows. Its diversified business model provides better growth potentials. The company also has a long history of consistent dividend growth. Enbridge has paid dividends for over 70 years to their shareholders. As of recording this video, the stock price of Enbridge towards TSX is 64 Canadian dollar, and on NYSE it is about 46 US dollars. Of course, at the time you watch this video, the price may fluctuate. Enbridge currently pays dividend of around 377 Canadian per share annually, which is about 94 cents quarterly. That means if you own 10 shares, you will receive 37.70 per year, and they will pay quarterly. So in a quarter, you will get about $9.40 for the 10 shares you own. Over the past 5 years, Enbridge's stock price has shown excellent growth with an increase of about 44%. It currently has a market cap of almost $141 billion. In their last earnings report for end of 2024, Enbridge posted earning per share of 0.75. This indicates a solid financial performance, and I'm looking for their earning report for Q1 2025, which is in a couple of days. Enbridge's future outlook is quite positive. Along with their existing business, the company is also investing in renewable energy projects, positioning itself for the energy transition. It focuses on maintaining a strong balance sheet, and also dividend payment is consistent and growing. They also actively acquire companies and expand their business. Just in 2024, they acquired 3 US gas companies for about $19 billion of transactions. Second in my list is Canadian Natural Resources Company. The ticker symbol is CNQ for both TSX and NYSE. So why should you invest in CNQ? CNQ is one of the largest independent crude oil and natural gas producer in Canada. Mostly their operations is in Western Canada, UK, part of North Sea, and they also have some offshore activities mainly in Africa. CNQ has one of the strongest and most diversified asset portfolios of any independent energy producer in the world. They have a mix of assets such as natural gas, light and heavy crude oil. The company has a track record of paying consistent dividends. At the time of recording, the stock price for CNQ in Canadian TSX is 39 Canadian dollars, and for CNQ in NYSE is about 28 US dollars. They have a market cap of about $60 billion. CNQ also offers a competitive dividend yield, currently around 6%. The quarterly dividend per share is approximately 60 cents per share. CNQ also has experienced significant stock growth over the past 5 years, with an increase of over 240%. This strong performance is largely attributed to higher oil and gas prices and the company's efficient operations. In their latest quarterly earning report, CNQ reported revenue of about 9.47 billion Canadian dollars and their net earning of $1.14 billion. This reflects the positive impact of strong energy prices on their profits. The future outlook for CNQ still remains positive. It is supported by continued strong demand for oil and gas throughout the world. The company focuses on cost efficiency and also maximizing dividend payouts. Third on my list is Suncor Energy. Ticker symbol is SU on TSX and NYSE. Suncor is a company that has multiple businesses, from producing oil, from oil sands to exploration, petroleum refining in Canada and US, and also they are involved in retail. It also has offshore oil and gas operations and runs gas stations across Canada. If you have pumped your gas at Petro-Canada stations, that is owned by Suncor Energy. So why should you invest? Suncor is a key player in the oil sands with large reserve and production capacity. The company is also focusing more on reducing emissions and sustainability. At the time of recording, the stock price of Suncor is about 46 Canadian and 33 on US side. They currently have a market cap of $41 billion. Suncor offers a dividend yield of close to 4.7%. The dividend per share is about 57 cents. Over the past 5 years, Suncor's stock price has shown a growth of about 90%. While influenced by oil price fluctuation, the integrated model they have has provided some strength. In their latest quarterly earnings report for Q1 2025, they reported annual revenue of 12.45 billion Canadian dollars to 1.31 EPS. Suncor's future outlook is tied to global energy demand and oil prices. Like other companies, they also actively acquire companies. Just as an example, they recently acquired Total Energy's EP Canada and 100% of Fort Hills. Next up on my list is Pembina Pipeline. Their ticker for TSX is PPL and PBA on NYSE. Pembina Pipeline is a leading transportation and midstream service provider in North America. It operates transportation and storage facilities delivering oil and natural gas to and from various parts of Western Canada. Just an example, their gas plants process enough gas to heat almost 12 million homes annually. Pembina also has a history of dividend growth and acquisition to expand their business. At the time of recording this video, the stock price of Pembina Pipeline is about 54 Canadian dollars or 39 in US. They also have a market cap of about $31 billion. Pembina offers an attractive dividend yield, currently around 5.3%. The dividend per share is about $2.76 per year. That is about 69 cents per share quarterly. Over the past 5 years, Pembina's stock price has shown moderate growth of about 71%, reflecting its stable business model and consistent performance. In their latest quarterly earnings report for end of 2024, they reported a revenue of 2.15 billion Canadian dollars and they also reported EPS of 1.01. Their future outlook is also positive, driven by the continued need for energy transportation system in North America. The company focuses on expanding its pipeline network and midstream asset supports the future growth. Its stable cash flows and commitment to dividends make it an attractive income generating investment. Now, in the interest of time and you don't get bored with all these technical details, I will not describe more about the stocks for the rest of the stocks that are on my list, but I will leave it to you to research more. Next few stocks in my list are TC Energy. Look for ticker TRP on TSX and NYSE. Another one is Tourmaline Oil. Ticker is TOU on TSX. Next on my list is Cenovus Energy, ticker CVE in NYSE and TSX. So there you have it, the 7 energy stock that you should research on. If you are also interested in ETFs, I have made a video that talks about ETFs, including one that focuses on all the energy companies in Canada. Please feel free to watch it. So what are your thoughts on these energy companies? Let me know in the comments, and if you found this video helpful, please like this video and support me by subscribing to my channel. Thanks for watching and I will see you in the next video.